The live intraday price for NUBURU Inc. stands at 0.2285 cents as of May 13, 2026, representing a decrease of 4.79% during the current session on the NYSE American. While the ticker symbol BURU might look like just another penny stock fighting for air in a crowded tech sector, what most people are missing is the aggressive pivot this company has made from a simple laser manufacturer to a high-stakes defense and security platform. The market currently sees a struggling small-cap entity with a history of dilution and a reverse split, but the reality behind the scenes is a sudden, funded ramp-up into the $20 billion counter-drone market. This gap between the public perception of a failing tech startup and the private reality of a company securing Tier 1 government orders in the Asia-Pacific region is exactly where the tension lies for investors today. If you are watching NVIDIA stock or Apple stock for high beta moves, you are looking at giants. But NUBURU is attempting to build a specialized moat in directed energy tech that these giants haven't even touched yet. The curiosity loop here isn't just about the blue laser technology itself, but the fact that NUBURU is currently activating a transatlantic defense manufacturing joint venture that aims to put mobile additive manufacturing containers directly into government hands. Most traders on investing sites are distracted by the recent $12 million public offering and the subsequent price compression, which is understandable. It's hard to stay optimistic when the 52-week high of $4.24 feels like a distant memory compared to the current 22-cent range. However, the expectation that this company is just burning cash until it disappears is being challenged by a very real pipeline of $6 million in combined orders across their software and directed energy verticals. This isn't theoretical anymore. They are moving from the lab to the battlefield, and that transition is usually where the most significant volatility occurs. When you look at the recent daily swings, the volume remains relatively light, sitting around 165,000 shares today. This suggests that the retail crowd hasn't quite caught on to the recent news regarding the Tecne Golden Power Pathway in Italy or the expansion of their directed energy roadmap. Institutional activity has been cautious, likely waiting for the company to hit its target of positive shareholders' equity in the second quarter of 2026. If they hit that mark, the narrative shifts from a survival story to a growth story. Many people using SoFi Invest or the Robinhood app are looking for the next big thing in AI, but they often overlook the non-kinetic defense sector. Directed energy is effectively the physical manifestation of high-level tech on the battlefield, using blue lasers to dazzle or disable electronics without traditional munitions. For those of you managing your own portfolios through interactive brokers or seeking investment help from a professional, it's worth noting that NUBURU has fundamentally changed its business model. They aren't just selling lasers to industrial clients for welding anymore. They have strategically acquired Lyocon and established a foothold in Ukraine by producing the Gralian platform. This is a massive shift in sector momentum. Instead of competing with every other industrial toolmaker, they are now operating in a mission-critical space where the U.S. government and its allies are desperate for cost-effective counter-UAS solutions. The expectation was that NUBURU would stay a niche player in agritech, but the reality is they are now a dual-use defense company with a structured production ramp for high-power systems already underway. The common ground for most investors is that NUBURU is a high-risk play. No one is disputing that. The company has faced going concern qualifications in the past, and that's a heavy weight for any stock to carry. But the contrarian view is that the market is valuing this company based on its past failures rather than its current pivot. For example, the activation of the Maddox Defense Joint Venture in Houston provides a physical infrastructure in the United States that they simply didn't have before. This isn't just a paper company. It's an entity with manufacturing capacity, software orchestration through their Orbit platform, and a roadmap that includes 500-watt next-gen lasers. When you see a company trading at these levels despite a $6 million pipeline and a growing list of government contracts, the math starts to look different than the typical meme stock narrative. Comment below how many shares of NUBURU you currently hold, or if you think the directed energy sector is still too early for retail investors to touch. Engaging with the community on these microcap stocks is often the only way to get a pulse on the sentiment that the big data aggregators miss. While the Fidelity mobile app or Schwab Intelligent Portfolios might categorize this as a speculative high-risk asset, the individual brokerage users who do their own research can see the specific catalysts on the horizon. The primary catalyst is the successful integration of the Tecne mobility and electronic warfare capabilities, which could scale their annual program significantly if they receive the necessary regulatory approvals in Europe. Looking back at what the company actually does, NUBURU's core strength is the 450 nanometer blue laser. Most industrial lasers are infrared, but blue light is absorbed much more efficiently by metals like copper and gold. This was their original pitch to the market, better welding for electric vehicle batteries and electronics. That business still exists, as seen with their recent order for 40 high-power systems for a Dutch agritech company, but it's now the boring part of the business. The exciting part is taking that same efficiency and turning it into a non-kinetic weapon. Because the blue laser is so efficient, you can get the same power output from a much smaller and lighter unit than an infrared laser. For a soldier on the ground or a small drone-mounted system, weight and size are everything. This is why they won that Asia-Pacific order. They can provide a portable dazzler that actually works in the field. The business model has shifted to a platform approach. They want to sell the hardware, the lasers, but they also want to license the software that orchestrates them and provide the mobility platforms to carry them. This is where the Orbit acquisition comes in, providing a SaaS-based operational resilience platform. This is a classic razor and blade strategy applied to the defense industry. If they can get their hardware into the hands of several governments, the recurring revenue from the software side becomes the high-margin engine that could finally lead the company to profitability. It's a far cry from the expectation of a company that was nearly delisted just months ago. As we move towards the final section of this analysis, we have to talk about the future outlook and the risks that still loom large. The biggest risk is execution. NUBURU has the tech, and they seem to have the orders, but can they scale manufacturing fast enough to meet demand without another massive round of dilution? They have already restructured their Series A preferred liabilities, which helped the balance sheet, but the market is still wary. The macroeconomic pressure of high interest rates doesn't help small companies that need capital to grow. However, the opportunity lies in the fact that defense spending is decoupled from the broader economy. Governments don't stop buying counter-drone tech just because the consumer is feeling a bit of a squeeze. In summary, the central insight here is that NUBURU is currently a company in the middle of a massive identity crisis, but in a good way. The market still sees it as the old NUBURU, a niche laser company with a messy cap table, but the reality is an integrated defense and security platform with initial revenue validation and a massive total addressable market. The expectation is continued stagnation at penny stock levels, but the reality is a company hitting its production ramp in a sector that is currently a top priority for global defense departments. Whether you are using Fidelity Wealth Management for your long-term goals or self-investing via the Robinhood trading platform, NUBURU represents the kind of asymmetric risk-reward profile that defines the current speculative landscape. The tension between its current price and its growing defense pipeline is palpable, and the second quarter of 2026 will likely be the moment we see which side of that tension wins out. If they achieve that positive equity target, the going concern label disappears, and a whole new class of institutional investors might finally be able to step in. Maintaining a sense of authority in this space requires looking past the noise of daily price action and focusing on the contracts. Every time NUBURU announces a new government order or a manufacturing milestone, they are effectively building a floor under the stock. The recent news about the Dutch agritech ramp-up and the Asia-Pacific defense order shows a company that is finally learning how to execute on multiple fronts. It's no longer just a laboratory project. It's a business with a transatlantic footprint and a clear strategy to dominate the blue laser niche in both industrial and defense applications. For the smart investor who prefers online investing over traditional methods, this is the kind of deep analysis that forces a rethink of what is truly possible for a company that the rest of the market has left for dead. The depth of their technological moat is real, and as reality slowly catches up to expectations, the narrative for NUBURU could change very quickly. Stay focused on the milestones, watch the cash flow in the upcoming Q2 report, and remember that in the world of high-tech defense, the smallest players often have the most to gain when their tech finally hits the field. This isn't just about a stock price, it's about a fundamental shift in how non-kinetic warfare is conducted, and NUBURU is positioned right at the center of that change. Regardless of the daily fluctuations, the long-term trajectory will be defined by their ability to turn these initial prototype orders into a sustained, scalable manufacturing machine. Authority in the market comes from recognizing these shifts before they become common knowledge, and NUBURU is providing plenty of signals for those willing to look closely at the data. Keep a sharp eye on the next several weeks as the Italian regulatory approvals come through, as that could be the final piece of the puzzle for their European expansion. Disclaimer: this video is for educational purposes only, not financial advice. Please do your own research before investing. Market involves risk. Like this video, comment your thoughts, share with your friends, subscribe for more updates.